Good morning, everybody. Welcome to the Investing Bros. We got a great show lined up for you today because we have a lot to discuss. First of all, Bitcoin did rally yesterday all the way to 26,000 before it was rejected. However, we did not close a daily candle above 25.2. We will talk more about the significance of that and question, is that a sign that the bears still have some form of control, or is that about to break here very, very soon? In bigger news, though, we are seeing this morning that it is predicted that the Fed is going to cut rates by over 100 basis points. That is because we're also now seeing, on top of everything we saw last week with banks crashing like Silicon Valley Bank, we're now seeing others headlined by Credit Suisse be on the fritz and looks like they are about to go down as well. The banking fiasco is not over. This could be what pushes Jerome Powell and the Fed to go back to a state of quantitative easing. We will talk about that and a whole lot more in this video. So if you are excited, make sure you go ahead and smash that like button. And if you are new here, consider subscribing to the channel where you get your daily content every morning, 9 a.m. to 10 a.m., covering Bitcoin and crypto and stocks and news and TA and everything you need to know so that you can invest as wisely as possible for yourself. Like I said, go ahead and subscribe. With that said, I do want to throw it over to two of my co-hosts. First of all, T Shroom. How are you doing this morning, T Shroom?
I'm doing better than I deserve, Tim. I'm going to be straight up with you. I'm going to be honest. Better than I deserve.
It's better than lying.
Yeah. It is. And I've got a special quote here. This one comes from Crux of Crypto, who helps us plan every show and has just been a really good resource. So if you'll go to my screen, you can see the quote of the day, which is, the way I see it, if you want the rainbow, you got to put up with the rain. And that comes from none other than Dolly Parton herself, who I was jamming out to this morning as I was eating my cereal and drinking my coffee. Love to get some Dolly Parton in my morning, and I recommend it for you too.
Yeah, that is a very Dolly Parton-esque quote. I feel like that quote sums up Dolly Parton very, very well. What are your thoughts about that, Army Piper? And by the way, welcome. How are you doing?
Brother, I am doing lovely today. I'm primed. I'm ready for the show today. I'm ready for my retirement this week. I'm ready to hang out with the bros for an hour. I can't complain, man. Life is great. As far as that quote, absolutely true. I get all of this enjoyable retirement ahead of me, and it's because I've dealt with 21 and a half years of rain in the Army. So there you go.
Very cool. Very cool.
A little glitchy there for me. I don't know. Hopefully that didn't go through to everybody else. Good to know. Good to know. We're going to cover a lot more. I do want to get into, we're going to read some names here in a second, but I want everyone to go vote on the poll that I have this morning. At the moment, as it stands, we only have 31 votes. So I do want to see more of these before we make any type of prediction what our audience really thinks. But the question is, will the Fed actually cut 100 basis points by December? And we're going to talk about that here in just a second with Rick, Army Piper. And but right now, the three options: yes, they will slash them; no, but we might see a small cut; and no, we will keep going higher. The 44% is the highest one with no, but we might see a small cut. What do you guys think? I real quick before we get into some of this other stuff, T-Shirt, what is your vote? If you're voting on this poll, what did you vote? Do you think we're seeing 100 basis points, or are we seeing higher, or are we just going to get a small cut?
I think we are. I think we're going to see 100 basis points.
Yeah. Okay. What about you, Rick?
I think we're going to see 100 basis points. I think there's a lot of pressure from the politicians because of jobs. And I think that we're seeing the inflation numbers come down, which we've even seen new data today that tells us that we're on the right path for supply meeting demand, which is going to bring inflation down too. So there you go.
I said this yesterday, and I'll say it again for those who might have missed it. I think I can't give a definitive answer on what I believe until I've heard what Jerome sounds like at this next FOMC meeting next week. Because as Caleb Franzen pointed out on Monday very beautifully, he said that this was an expectation of Jerome Powell and the Fed. They did expect the banks, some certain banks, to start struggling. I don't know if they expected to this magnitude and the banks of this size going down. So it'll be very interesting to hear what Jerome and the Fed think about the situation. If they hold their ground, there's a chance that interest rates maybe don't go up as explosively as they had previously said, but there's a chance they continue to try to raise them. But if he does come out, especially if we see a cut in March, which is not yet predicting, but it's getting that way, if we see at least a freeze, so a 0 interest rate hike, and more dovish sentiment from Jerome Powell, I think there's a very decent chance that these predictions are spot on and we end up seeing 100 basis points cut. The question is, what would that look like for the economy? Because remember, historically, when we see a pivot of the Fed, we actually see the economy go into a little bit of a spiral. We're also seeing a lot of job reports, this number from bigger companies, where they're laying off. I think Meta this morning is laying off 10,000 employees. There's a different company, I can't remember what the name of it was, but I thought I saw another good amount, thousands of employees being let go. So what happens if and when the Fed finally do pivot, and what does that look like for the rest of the year, specifically Bitcoin and crypto, which has never had to go in and see this type of a situation where there is a major Fed pivot? A lot of questions still to be answered the rest of this year. But let's go ahead and read some of the names in chat, and then we'll get into our macro outlook this morning with Army Piper, and then we'll dive into the charts. And then we'll get our morning going. So the first comment of the day was CBD Suddy.
Nice.
And I can't read what he says because the poll covers it. But T-Shirt, do you see what he commented there?
Yeah, let me scroll on up, and the poll covers it for me as well, unfortunately.
Well, we do want to celebrate that he was first.
Oh no, I remember. He said good moanin'.
Good moanin'.
I remember reading it.
There we go.
It was so memorable. He said schmonin', y'all.
There we go.
Schmonin'.
We also have Eric Wallen coming in second, saying, morning, I turned 40 today. So first of all, happy birthday to Eric Wallen.
Oh, wow.
So glad that you're choosing to spend your birthday with us. And I hope you have a fantastic, amazing day. You know what they say, real life starts at 40. So T-Shum and I, we're pre-life. Yeah, we're pre-life. Keep going on. Let's read some other names here. Lexicaliber is here. Mr. J is here. Mike Play. Who else do we have? Dev is here. Justin Eubanks. Al Bundles with a lot of predictions for different projects to moon. Who else do we have in here? Yair Navarro is here. Elo Brown is here. Taylor Warren, my wife, she's up with her parents while she's on spring break. I don't know when she's coming back, actually, but she's in chat this morning showing some love. The kid coming. The kid, come on. I don't know which one he wants to go with the inflection of that, but he is here in chat. Crypto JMP is here. Joe Nickel. Let's see. Servando Estrada is here.
Estrada.
I had to wait for the Estrada part. Crypto Mini Bike is here. Crypto Trades. Ninja Glock. Shout out to one of our newer wrenches, Crux of Crypto, which, by the way, has been doing a fantastic job. A lot of the articles you guys see us cover are actually compiled by Crux of Crypto, so he has been killing it. Thank you so much for your help and support. Jeep Girl is here. T-Baz. We'll get a couple more, and then we will move on. Let's go. Rich Q is here. Gia S is here, and we'll go one more. If I find one more name I have not read just yet. Max PP is here. Thank you to everyone who is watching right now. We're about to jump into the content, and if I did not say your name, that does not mean I don't love you. It just means it is time to move on with the show. And with that being said, let's take a stop with looking at the macro outlook this morning with Army Piper. So go ahead, Rick, and take us away.
Hey, thanks, Tim. Appreciate it, man. And by the way, kid coming, it's Colorado, Minnesota combined together for COMN there. So,
nice.
Yeah, he just put that in the chat. So I wanted to make sure that was clarified there for him. So looking here, guys, look, this morning we had retail sales came out month over month and PPI that came out month over month. Retail sales down slightly. It was up 3.2% the previous month. The consensus on it was that it was going to be down 0.3%, forecasted at 0.2%. Looks like the actual came in down 0.4%. So that they're showing that there's less demand, which is good, right? Because that's what causes this whole thing with inflation is supply and demand of goods, right? So demand is coming down. At the same time, though, we got PPI data that came in. And PPI data This is going to be your producer price index, okay? And what this does is it shows you what the cost of commodities and goods are for the producers to create, which means it's getting cheaper for them to make their goods now. So that should increase the supply. So with a lessening of demand and an increase of supply availability, that should bring down what we're going to see on inflation in the months ahead, right? So if you take a look here on the PPI data, it was down 0.1%. It was expected to be equal to what it was last month and forecasted to be even higher than what it was last month. So this was an unexpected fall in the PPI data that came out this morning. What does this mean? Well, basically, if you look at that, the demand is going down, hence the retail sales, and that the price of commodity goods for the producers is coming down, which means the increase of supply availability. We should have the CPI data coming down in the months ahead, which means that the inflation rates can be cut, because that's the whole point. If your inflation is high, you bring either your supply availability up to meet the demand, which brings it down, or you bring your interest rate hikes up, and that's where those rates become more expensive to get loans and so forth, which lessens demand by protocol, right? So when you get those up there to the same level, you can start walking them down the mountain together, right? So that's what we're seeing right now, is that ahead of time, this 100 basis point cut projection that's being talked about now is actually seeing data to support that move by the Fed. So that's what I have for that, Tim.
Absolutely. And I'm going to kind of continue on with that. Like I said, we talked about it this morning. We'll probably discuss this more in the show, but in case you guys have not seen this, I did want to bring it up. Go ahead and go to my screen here, Piper. We have right now a prediction. I'm going to refresh this actually. Before I say this, I want to make sure, because this has been changing this morning. Okay. I'm very glad I updated my screen. Just now, we have flipped into 50.5% chance that we're going to see a pause. No interest rate hike whatsoever. We are currently hovering between 450 and 475. Still 49% chance of a 25 basis point. But again, we're talking about massive swings in this prediction. Just last week, there was a 80% chance we were going to be seeing a 50 basis point hike. Then it swung back to just 25. And now we are looking at a pause. Now, the big news of the day is that the Fed is predicted to cut by 100 basis points. Let's go month by month and try to look at what the predictions are. So you're seeing it come in this morning. Right now, it is the highest prediction that we are going to be seeing 0 interest rate hikes in the month of March. Now, we get 2 months of a gap. Then we go over to May. In May, right now, okay, so we're still predicting at the moment. I think this is probably going to catch up, but it is still predicting that we make it to 475 to 5. So some of that might be still coming over from March. Either way, whether we get 25 in March or May, it is expecting right now, 50% are saying May should end 475 to 500. Again, this data, take it with a grain of salt. Things change very, very quickly, but I just want to show you what the market is looking at right now. Let's fast forward to June, where June it has us come all the way down to 425 to 450, which would imply if these predictions were to just hold tight where they were, there's going to be an interest rate hike either in March or May, but then in June, a cut of 50 basis points. So we're starting right there. Then in July, let's move forward to July right here. July is predicting another 25 basis point cut down to 4 to 4.25. September, we're expecting at this point another 25 basis point down to 375 to 4. In November, this is when we see is predicting the last cut at the moment, 350 to 375. And then, of course, we have a pause in December. That is what we are looking like, but currently hovering between 450 to 475 and December being predicted at 350 to 375. That is the 100 basis point cut that is being predicted. We will keep you covered on this, so make sure you continue day in and day out for the rest of this year to tune into Investing Bros 9 to 10 a.m. Eastern Standard Time so you don't miss a single update to this chart. With that said, let's go ahead and go over to our Bitcoin chart and cover some TA this morning. I do have the predictive ranges from Chart Prime up this morning, which have been absolutely killing it here. Look at the last couple that have been within this megaphone pattern we've been developing since back here in late January. These have called the tops and bottoms just about perfectly. Technically, these two called a little early, but there wasn't too much of a rally above or below these calls before reversal finally came in. We did get this yesterday during our rally up to 26,000. Now I want to turn that off for just a second and have you just kind of look at this formation we have drawn right here. This is something I've seen a lot of influencers talking about, but notice we did not quite touch this level. We didn't quite get all the way up to the 27,000 or the rising level of the megaphone pattern. Could we potentially see this happen? Let's pull up the market oracle, and I got to kind of play with some figures here just a second. So give me a second here. Is this going to give me what I want? I think I actually am going to take off this one and updo my smart money concepts. Yes, here we go. So you guys can see this is one of the coolest tools we have here in Chart Prime. Just several levels, just identifying key levels of support and resistance. We bounced on just a whole lot of confluence down here. These lines, by the way, are coming from our daily chart, our 4-hourly chart, and our 12-hourly chart that are looking at significant levels of support and resistance. We bounced off of this little bunch with our predictive reversal range and then slashed through resistance all the way up before, even though we broke through, we have now wrestling with this 4-hourly close. This would be the 4-hourly local mode resistance level at 25.2. Of course, we already knew the significance of 25.2 as that has been a spot we've been watching for a very long time. But what we talked about yesterday is the concept of this next level of resistance sitting at 27,000. That also, by the way, matches up. If I were to go out to the daily chart, let me turn these off so I don't have a lot of chaos going on there. But if we were to pull up our fixed range volume profile over the last little bit, let me turn that off there too. And we were to look at some levels in the gap, you're going to see when I zoom in here nice and close that the absolute bottom of this gap in the fixed range volume profile is in fact right on par there with 27,000. So the whole reason I'm saying this is I still think, despite the fact that we got close, didn't get there and pulled away, this would not be the first time that a predictive range gets close. People get flooded out and think, all right, never mind, we're not going to that level. And then another rally comes to make up for it. I'm not predicting necessarily with 100% certainty that will happen, but I will make the statement, keep your eye on that level, as it is not only a flat level of resistance that we've identified using our fixed range volume profile, also one that's being called by Chart Prime. It's also, it would make a lot of sense based off of this megaphone pattern that we are developing right now. Now, if we are not able to hold that, and right now we're wrestling, like I said before, within this little range right here. Let's go back down to the 4-hourly chart. We're wrestling within support levels right here between that 25.2 all the way down here towards 24.8. Yes, we have some wicks below, but the last 3 4-hour candles, meaning the last 12 hours, have wanted to close within this level. If we cannot hold, what I'm looking for is all the way down here at 22,800. This is going to be an important level to keep an eye on because it's also where we're going to find our merge of the 4-hour dynamic reactor. Again, I've said this before and I'll say it again. The tools that you get in Chart Prime are absolutely fantastic. One of the cool things, by the way, let's look at this dynamic reactor, small education on this. I was playing around with it the other day and noticed that it's almost the exact middle. It always is fluctuating between the 100 and 200 SMA. So these are two levels in terms of moving averages that people like to watch a whole lot. But notice as you scroll back, it's constantly in the middle. And a lot of times when you see a cross, you're seeing the dynamic reactor respond right with those crosses. So this is a good average as you're looking at these two very powerful moving averages, that the middle between them, more often not, that's what this dynamic reactor is kind of showing us. And that is why it has so much power when it comes to resistance and support, and is something to absolutely keep your eye on. And again, if you don't have Chart Prime, make sure you'll get it today. There's a link in our description below. For just the next 5 days, you can get the lifetime deal for 50% off, but then it's going away and might not come back for a very long time. Make sure you go act on that today, again, down below. Let's take a look at some other things, though. Oop, did not want to click on that. Let's take a look at some other things when it comes to our oscillators here. Not necessarily doing anything crazy. What I wanted to point out, of course, we had a great call here by the oscillator with our oversold and our reversal triangle, but I want to take a look. I'm going to put that down for just a second. I want to take a look just at the RSI, where you will notice that we did break a key structure. I saw some people kind of commenting on this yesterday as a form of saying it was resistance, but notice that the RSI had been being rejected. Just like price can have resistance and support of its peaks and its dips, so can the RSI. And so while we were kind of forming a megaphone pattern with our price action, we did have the RSI almost showing us a trading channel. Now, again, we only have 2 touches there, so it's not the most approved trading channel, but notice that we had a break of structure in our RSI. I don't want you to get crazily too excited about this just yet, but this is a change in the trend. This is not a consistency. It broke this trend, which could allow for this next rally up on Bitcoin to happen, especially when you pair it with this most recent news. Again, you guys have heard us say this before. We're big on technical analysis. We like the news as well, but the problem with the news is that a good portion of it is just noise, and it can really distract you or cause you to FOMO in or FUD out of good moves. Whereas if you just looked at the charts and looked at the levels and waited for good reversals and good supports, then you would actually be able to invest very wisely. Stories like what we have today are very, very heavy and bring massive waves into the market. So at the moment, while we are looking like we are more bullish at the moment on the larger time frames, we do have some things kind of popping up on the 4-hour chart. Like I said, we did have our reversal predictive range right here pop up on the 4-hourly chart. But watch as we get back down to some of these support levels, as we wrestle with them. Can we bounce and make our way back up towards 27,000, or do we make a push maybe back down to 22 or below? At the moment, there's a lot of things I would say still sitting in favor of the bulls, but crypto can be a crazy place. You don't want to count your chickens before they hatch, and there still is a lot of things calling for a little bit lower as well. That's all I'm going to talk about here with Bitcoin. I do want to take a quick look, though, over here at the Dixie, because the Dixie is back up above 104. Not that it's necessarily running away with anything, but it is coming back up. This is a little bit surprising, as it is looking like the Fed is going to be easing here very shortly. Potentially, maybe, is this just a pump before it knows it's going to get hit on the head? Or even Piper and I were talking about this just yesterday. Is this just the dollar gaining up because we're seeing other currencies have so many problems as well? Either way, we did just break bearish here a couple of days ago out of a rising trading channel within a larger time frame trading channel that was falling. And now we're moving back up to retest this as resistance. We're also kind of getting back in the zone. If you're looking, I'm going to go back to the daily chart. If you're looking right here on our Fibonacci levels, we've talked about the importance of this 0.382 level that has been a form of rejection for the Dixie now for several months. We're going to be approaching that level again, but do we see the Dixie begin to make its new descension in this falling trading channel, coming back down possibly towards this golden pocket of about $98? This would be a good sign for crypto, for stocks, because it would be, obviously, the money would more than likely be moving out of the dollar and into those assets. But keep your eye on what's happening here with the Dixie, as it will be very important. What time do we got? I want to see how much more. Oh, I got lots of time. I got 8 minutes so we can get in here and do some more TA on some other projects. Let's take a look at what is happening on Ethereum and kind of catch up on what's happening over there. I want to turn on my Market Oracle for just Market Oracle for just a second. Come on, pop up for me there, Oracle.
Well, the Market Oracle is great.
It is. It just doesn't want to load. I might have to refresh my page here. Give me just a second. There we go. All right, so it's going to pull up my SMAs for me. Thank you for that. Let's go to the Ethereum chart. It's going to give me my levels now.
We're getting close. I can feel it. I can feel the Oracle.
Well, it is okay. It's giving me levels back here, so it just does not want to print anything over here. All right, good to know. So the Market Oracle has not printed any predictive ranges here on the Ethereum daily chart. I guarantee if we went down to the 12-hour chart, we're probably going to find some more printed in this region. There we go. All right, so let's look at the 12-hour chart for right now. We are seeing some things print that are a little more bearish. Like I said, we have that predictive reversal range right here. Look at Ethereum. It had a little bit. That call isn't the best one in the world with just one red candle. But if, to be fair, everyone thought that this rally was absolutely ridiculously crazy. A lot of people thought we would reverse well before, but these other calls that it is making have been pretty good. This is also pairing with our oscillator, the chart prime oscillator, just printing in a red triangle, and the ribbons are starting to twist. So this isn't yet, when you're looking at it like this, when you look at this oscillator, this isn't time to necessarily throw in the towel and start entering all the shorts you can. I would say, looking at this, if you are in a long on Ethereum, I absolutely would recommend at least taking some profit to cover yourself, because there is a chance this just curls over and we make another push. This happened a lot during this rally. Let's see, on smaller time frames especially, but like right here, you can see that our ribbon twisted right here just as we got going. We stayed in an overbought area, even though we continued to climb up, before finally we had some bearish divergence send us back down. So right now, again, there's no guarantee that this is absolutely the top, but with these two signals, this reversal triangle and the predictive reversal down, I would say this is something to start keeping your eye on, of levels to potentially to take some profit at least. Again, they also, when we're pulling up our support resistance levels, looking at, again, daily chart, 12-hour chart, 4-hourly chart, we're seeing just a bunch of levels come in at this area. That's 3 different lines of resistance. So another reason why potentially we could see that reverse. Now, there is a very big dip. While the dynamic reactor, the 12-hourly chart, is popping up here at 1540, and it's climbing, so a meeting of that could happen closer to the 1550s. The next significant support levels, when at least it comes to the 4-hour chart and up, is looking like it's coming all the way down towards 1425. That is low, but it is something to absolutely keep your eyes on. Let me turn those off for just a second, and I'm going to upgrade and go down to the hourly chart and see what it is saying. Let's see here. Do I have? Okay, I don't want to use that one, actually. Sorry. Let's go back to this one, and I'm going to upgrade this setting. I'm going to turn on my local mode, and I'm going to go down to the hourly chart to see if it adds any support levels whatsoever to this case for the foreseeable future. Yeah, we got a lot more coming in here. I like to use 10 on this one. The strongest one of them all in the hourly chart is popping up of what we just bounced off of here at 1675. But keep your eyes as we start. If we were to make a bearish break and we start heading back down towards dynamic reactors, keep your eyes on 1600 and 1640 according to our market oracle right here. On the macro view, though, let's go back out to the daily chart. Don't need my oscillators. We did fall out of a falling wedge only to pop back in, and are also using that as support. So this is a very confusing. Technically speaking, I would say that this formation has been disqualified. It's no longer really a good formation, but I like to keep the support and resistance levels up there just so I can continue to watch key levels, because that's the thing about TA. Even though formations are a great tool and they help predict levels to look for, they still are places where we've seen buying and selling pressure, so you want to keep them up for as long as possible. Let's take a quick glance over here. Last one I'm going to look at this morning, Cardano. Again, Cardano made a nice bounce right here off of the golden pocket, but it is not getting the same push that we necessarily saw from both Bitcoin and Ethereum, getting nowhere close to the peak we were just at here in February. We did touch 36, almost 37 cents on the Binance.US chart, but of course we came back down. Let's take a look at some support and resistance levels to keep your eyes on right here. You're going to notice we're sitting at a bunch right here down, so we more than likely could be finding support in this 32 to 33 cent region. A push up would give us a closer look. We go back to these highs we had in February, back up to 42 cents. Our daily oscillator is looking like this is lots of room to run, not necessarily bullish or bearish. Let's move down. Let's see what the 4-hourly chart oscillator is looking like this morning. We did have an overbought flash that came with bearish divergence I called the tops, but this is another one. This is not sitting in an overbought or oversold territory. This absolutely could make a push back up. Cardano, confusing coin, but due to the fact that we did not get a great push on the CPI data and on the push that Bitcoin and Ethereum did as well, do not be surprised if the next leg up, if there is one, that Cardano outpaces Bitcoin and Ethereum. We've seen this happen before. Not saying with 100% certainty it's going to happen again, but it would make a lot of sense. So that is what we're looking at here on those charts. Again, if you guys want to see other TA One of the most powerful places you can see that is over in our Discord, the Investing Bros, and in the Discord that you would get if you purchase Sharp Prime. They have a phenomenal team over there that does a lot of education, and they talk about this all the time. Rick, Army Piper, goes live multiple times a week to do TA and trading tips on altcoins. So make sure if you are not getting all of your altcoin TA you want, you go join those two Discords, as you will be more than happy to get that over there. Go ahead and go off my screen here, Army Piper. I did see while I was talking, we got a couple of super chats. And after reading those, T-Shirt, we can dive into our market open, as it will be 9:30 at that time.
Absolutely. So getting into super chats here.
Let's do it.
All right. Well, the first one I'm seeing from Redbeard Crypto, donating $7 Canadian, said, hello from 88 inmates. Love this show. So big shout to the inmates. I know that that's a pretty big CNFT project. And, hey, getting some recognition here on the Investing Bros. Eric Wallen donating $2, said $25K for my birthday. Absolutely. Bitcoin wishing you a happy birthday. You can hear it singing along. And that's going to round out our super chats, unless I missed any. No, that's it. So thank you so much, guys, for supporting the channel. It's really, really means a lot. Let's go ahead and get into the market open. But Piper, did you see anything in the chat that you wanted to mention?
Yeah, I want to know, is he asking for Bitcoin to go to 25K for his birthday, or does he want 25K for his birthday?
Interesting. Well, he didn't put a dollar sign on that, so we can give you, Eric, 25 Luna. We could give you 25,000. What are some other good ones?
I can give him 25,000 Shiba Inu.
There we
go.
go. Well, yeah, that's true. That wouldn't be that hard.
Yeah. Well, shooting over to my screen on the market open, guys, we have some pretty big news. Oil is selling off big time. It's down below $75 a barrel, and it is actually at 68. So it's down even below $70 a barrel. This is pretty wild, guys. I don't know that I was not expecting oil to sell off at this level. I'm not sure what the fundamental news on this is, but it's just coming up on my energy charts this morning, and this is significant. This is going to be ultimately bullish for inflation prints. If you are long oil producers, they're probably going to suffer a little bit here. But right now, the market is going to be taking this in stride. We're a minute in, and the U.S. oil is down 4.6% there. So natural gas, not too far. Well, natural gas future contracts not too far behind there, down 3.8, almost 4%. And then the ETF for natural gas down 5.1. Moving down into the indexes, you are seeing red, but who is leading the way? Lower, it is the Dow. So money selling out of security the most here in the first minute and a half of the New York session, whereas the NASDAQ is getting sold off the least. So folks wanting to hold on to those, what would be considered riskier assets that are in the NASDAQ on average. Interesting movement there for the indexes. We'll come back to that before we leave for sure. All right, going down to crypto. We've done some in-depth TA. Let's do some broad analysis here. Overall, you're seeing your big names cling to decent gains here. Big names being Bitcoin, Ethereum, not so much, although it's not down really that much for crypto. Let's see. Let's keep scrolling here. Binance is up 0.5 this morning, and then pretty much the rest is a sea of red names except for Cake, which is up 0.1. Now, don't consider Cake to be a super significant coin. It's just one that I like to kind of my pet coin. So that's on my watch list there. Okay, going into metals, both getting bought up this morning. Let's check out silver really quickly. Not going to spend too much time here, but as you can see, silver has made a run back up above 22 and is now in that 22 territory and holding on to it pretty firmly. This is on the weekly charts, by the way. If we can get a weekly candlestick close of silver up above 22, in that 22 range, that's going to be pretty significant for the bulls there on silver at least. All right, moving into your big cap tech stocks. Seeing red on the screen across the board, right? But maybe not as much as you would expect with what we're going to get into with the headlines here. Not that bad of a sell-off, to be honest with you. Tesla is getting sold off the most, down 2%. But names like Microsoft barely even down 0.1%, maybe about to go green here as we're watching. Pretty interesting stuff here. And then also same with your other tech staples here, Apple and Google, not really getting too sold off here. Folks looking to find now, yeah, there we go. Green now on the screen for Microsoft. Not what you would expect with the Credit Suisse headlines we're going to get to here in just a second. Now, here is really the biggest point of intrigue here. And Army, I probably will throw it to you to get a little bit of your insight as well. Bond yields totally tanking here. Let's take a look at the 2-year. This is significant. This is something's breaking territory. This is not good. So what does this mean? When yields are up, it means that folks are not buying bonds, right? So when yields are down, that means that folks are buying bonds. They're buying the bond, and that means that the yields do not have to provide an incentive for folks to continue to buy, right? So the bond yields being down means that bonds are getting bought up. Now, why would they be getting bought up? Because people do not want to have their money in banks. They don't want to have it in deposits, right? They want to have it in government treasuries where they can earn 3.8%, right? They want it somewhere where they can actually earn, and bank deposits right now are not performing as well. So you're seeing money rotate out, money that's on the sidelines and wants to be in like high security, moving out of security deposits and moving into treasuries. And that's happening quite aggressively this morning. Piper, I want to throw it over to you. Is that kind of what you're reading here from these bond yield sell-offs?
Absolutely. It's quite interesting because I'm also watching the charts, and Bitcoin and Ethereum and NASDAQ futures are moving up at the same time right now as the Dixie. So a little odd, like everything is, I think people are trying to find a place to put their money right now. And then you've got the euro going down at the same time because of Credit Suisse. Yeah. So the US dollar is on its way up right now in comparison to its basket of other currencies. And then everything else is moving up in confluence, synchronized with that rise. And I do think that what we're seeing right now with the drop of the yields is money going into those bonds, also the treasury bonds. So people are afraid of banks right now. And when you risk to reward, right, that we talk about that all the time in the trading world, when you look at what the risk is of keeping your money in a bank versus the reward of even 3.8%, I think it's a no-brainer for some people that's the safest place to put their money right now. So.
Yep, absolutely. Thank you, Piper. It sounds like we're in agreement here. So take a look at this. I've got JP Morgan's chart pulled up here. Not going to spend too much time on this, but you are seeing a bear cross here on the weekly MACD. You're seeing a first red histogram. Going ahead and diving deep into that red histogram. The first in a long time. The first since July 18th of 2022, the week of the 18th, back in July 2022 was the last time we saw a red histogram on the weekly MACD for JP Morgan. And look at this sell-off here, guys. This has been, again, these are weekly candlesticks down 9.5% since the beginning of March 6th. So folks selling out of their shares in JP Morgan quite aggressively there for that bank. You saw some action back here. If you're still on my screen, you saw some action back here in May where it did sell off a significant amount. And we're seeing that again here as the banks. I would be interested to see if Credit Suisse was the headlines back, because I remember there were some Credit Suisse headlines not too long ago. I wonder if this is when it was, because and what triggered that sell off back there for JP Morgan. All right, well, we're going to round out cannabis here. Red across the screen, not a surprise. Folks wanting to get out of risk. If you're looking for security right now, you're not thinking cannabis stocks. Mid-cap tech stocks also getting sold off to a pretty high degree. Robinhood leading the market down here, or leading my watch list down here, 3%, and also Jenny down 4.6%. All right, so the AI name also CP3.ai, CP30. .ai is down 2%. And then your oil producers getting sold off heavy here. Schollenberger down 5.6% in the first 7 minutes here. Oh, man. Oil producers just getting hammered, coming down, slicing right down through that level of support. That's going to round out our market open, guys. Pretty much the story is what the heck is going on with bonds, and oil is selling off heavy, and everything else is getting mysteriously bought up as money moves out of the dollar, moves out of bank stocks, and moves into basically bonds. Bonds getting bought up and Bitcoin getting bought up. There's a couple other things getting bought. I mean, equity, big tech not getting sold off that much. So not much money rotating out of big tech and rotating into gold. So we're seeing a lot of movement, guys, a lot of volatility across your asset classes. Well, that's going to round out the market open. I already said that, and I went back into the market open.
Well, sometimes you round it off and then you realize you drew a little bit outside of the circle.
Exactly.
So you got to go back with an eraser and clean it up, and then you're back.
I was never good with crayons. I'm in the Army, not in the Marines. So.
Yeah. It is really crazy just watching here what we've seen unfold over the last couple of weeks, because the big story of last year that was being pushed was watch out for crypto. It's a scam. You'll lose all your money. Don't trust it. Don't hold your money in crypto. And over the last week, there has been a complete shift in tone to where, again, in my lifetime, I have not seen. I know we had the recession of 2008, but even then, that was more to do with real estate market. And I don't remember my parents freaking out about the bank and should we keep our money in a bank. People are actually legitimately asking the question at this point: can I trust my bank? Can I trust whether you're using a large bank or whether you're using a little bank? Obviously, the ones using little banks are very frightened at the moment. Where can you hold your value? Where can you hold your supply? Because Bitcoin would be a very easy answer for us to say here in crypto, but let's remember here, as much as we are a crypto channel, as much as we love Bitcoin is still down very, very much so from its all-time high. We're sitting here celebrating 25.2. If you back us up to late last year, we're talking about, we're making back up to 25,200. We would have asked ourselves, wait, back up to 25,200? Like, we went down that far that we're excited about 25,200. So let's not get too excited before we see more success. But this is a very, very real problem, and is going to be, whether it's this time or maybe another time, this is going to be one of the things that finally wakes people up to realize you cannot put your faith in a government-backed currency. You've got to put your faith in something. Again, faith is a strong word. You've got to put your financial faith in something that has a trustless, permissionless system like what decentralized currency is. Whether we go ahead and use Bitcoin as currency or whether we form some sort of currency that is backed by Bitcoin, it is time to stop trying to trust individual humans as the backing of money and trust absolute systems that work, that don't rely upon the honesty or dishonesty of a human. With that said, T-Shroom, I know we could probably stay on that little train for a very long time. I know we have some stories to cover today. We've kind of hinted at them with the banks and with the Fed, but let's go ahead and jump into our story portion of the show, and we'll kind of break that down.
Absolutely, Tim. Well, we're going to start it off with a meme. That's the best way to start it off right here. This meme is coming to you live from Swang, and this meme says it's basically a little storytelling here of first Silvergate, and then SVB, and is Credit Suisse next? A good summary here of what these last couple weeks have been like and what the future could be like. Let's get into this Credit Suisse story, guys. Credit Suisse shares crash as Saudi investors rule out more funds. So let's get a little bit of backstory, get a little bit of details here. Shares of Credit Suisse crashed more than 20% Wednesday, that's today, to a new record low after its biggest backer appeared to rule out providing any more funding for the embattled Swiss lender. The answer is absolutely not, for many reasons. I'll cite the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether be it by our regulator or the European regulator or the Swiss regulator. Amar Al-Quderi told Bloomberg, we're not inclined to get into a new regulatory regime. Here is the key words here. The answer is absolutely not. So Credit Suisse had a pretty big investor that was kind of quote unquote bailing them out, and that a very stark line in the sand has been drawn. Biggest bank committed 1.5 billion of the 4 billion in new capital Credit Suisse raised to fund its overhaul. So the money that came out of Saudi Arabia is not that tapped. It's done. That liquidity is tapped. So that is kind of what is causing a lot of stability and a lot of uncertainty. And just to add insult to injury, guys, I do have a tweet here from Zero Hedge just from moments ago, which is several banks moving into sell ratings for UBS. Now, what is UBS? It is the other Swiss bank that is much bigger. Much bigger. So, I highly doubt that either of these banks are completely insolvent, but UBS is definitely would be on the not heavily not insolvent. So, but seeing sell ratings coming in confluence, 3 of them on the same morning here, not even 15 minutes into the New York session, is pretty concerning there for the Swiss folks. So let's keep moving, though. There are many other stories. BlackRock CEO Fink warns of financial risk and persistent inflation. Let's get into some of these details here. This is what he said. Bond markets were down 15% last year, but it still seemed, as they say in those old Western movies, quiet. Too quiet. Fink said in his letter, which was seen by Reuters, something else has had to give, as the fastest pace of rate hikes since the 1980s exposed cracks in the financial system. Couldn't agree with him more there. Fink said that quick regulatory action helps stave off a wider crisis. He wrote that he expects a more divided world will interrupt supply chains and make inflation persist and more likely to stay closer to 3.5 or 4 in the next few years. So Larry Fink, they're predicting sticky inflation, not going to be obedient and get back into that 2% target rate that the Fed holds, right? But rather going to be staying more in the range of 3.5 to 4, which is just going to continue to paint the Fed and Jerome Powell further and further into the corner of sins that they have been committing that just is forcing their hand. Well, that's one CEO's take. He is pretty powerful. He is pretty influential. And most people think he's pretty intelligent. And we're bringing it to you this morning. The rest of these, other than this, let's get into this one here. Breaking: Shanghai upgrade executed on testnet, but not without issues. So there's a little bit of a hang up here, but let's get into it and see what actually is going on. The Shapella, love that name, the Shapella hard fork has been executed on the Gorelli testnet, the last test run before Ethereum validators will be able to withdraw their ETH from the beacon chain. We've talked about that a lot of implications for that, but we're going to stay focused on the tech today. Ethereum core developer Tim Biko noted that while deposits were being processed, the process didn't run as smoothly as it could have been because several testnet validators didn't upgrade their client software before the Gorelli fork. So the big takeaway there is upgrade your validators, guys. He blamed it on testnet validators having less incentive to make the upgrade, given that Gorelli ETH is worthless, but expects validators to make proper adjustments ahead of the real fork onto the Ethereum mainnet. I hopefully so, Po.
There we go.
I certainly hope so. Let's move on.
Nailed it.
I'm just going to read the headlines here. SEC and DOJ launched probe against Silicon Valley Bank, so some investigations going on there. More than just mismanagement could be the result. U.S. officials attempting to block Voyager sale again, a report is showing. So getting some regulatory overstep potentially there. Circle able to access $3.3 billion of USDC reserves at Silicon Valley Bank, says CEO. And UK's third largest bank, NatWest, places £1,000 daily limit on crypto deposits. So some limitations there. And the Euro Parliament approves Data Act that requires kill switch on smart contracts. And that is going to all but round out our stories. The only other one that I wanted to bring to you guys' attention is kind of just a cheerleader story here. T-Mobile buys Ryan Reynolds' Mint Mobile for $1.35 billion. He did it, folks. Ryan Reynolds made the big sell. He exited, and he is now a billionaire, more than likely. I don't know how much of Mint Mobile he actually owned, but that's pretty interesting and good for him. Mm-hmm. as the rest of the market is freaking out, Ryan Reynolds is taking his money and running. Those are your stories. I want to throw it to Tim first. Tim, how important is this Credit Suisse story? Is this going to be a continuation of the bank collapse contagion, or is this unrelated? Is it something we shouldn't be worried about? What are your thoughts on the Credit Suisse story?
Well, Credit Suisse was having problems here not that long ago.
Correct.
This is not the first time recently we've been discussing Credit Suisse. This is huge. That is a very massive bank. It's not an American bank, and that's going to be a really big question, is what does the Fed and what do American politicians do in response to Credit Suisse? But it is very big because we're also talking about the global economy here. Even though it's not an American bank, the fact that the global economy still, for the most part, operates using the U.S. dollar as its basis of currency when it's doing trade, anytime you see a major bank go down, there's going to be ripple effects that come to the US dollar. And there's going to be, just as we've seen happening in Ukraine and Russia ordeal, the United States has decided to impose itself financially to, do some stuff there. So while we shouldn't see this affect the United States, I'm just about in the spot where I'm like, I guarantee we're going to see it affect us because we're going to probably see our politicians want to get involved to try to do something. But this, it breeds a bigger thought, going back to another story that you talked about here. So go to my screen real quick, Piper. I know you briefed over this, but UK's third largest bank, NatWest, places £1,000 daily limit on crypto deposits. Stop right there. This is a sign. This bank and the traditional banking systems are threatened by crypto. They're going to use a lot of excuses, but they do not want people running and putting their money into crypto in bunches because they're losing confidence in the currency that the government uses. The reasoning for this, it says, is the decision would prevent its customers from losing life-changing sums of money on crypto investments and scams. We'd rather you use your life-changing money, lose it in our bank. Don't lose it on DeFi protocols and crypto. It says in a quote from, I don't know who said this one, Stuart Skinner, it looks like, head of fraud protection, said criminals play on the lack of understanding of how cryptocurrency markets work and their unpredictability to encourage investors to transfer money to exchanges, which are often set up in the customer's own name by the criminal or by the victim under duress from the criminal. Let's pause right there. Scams happen. But you know what? Scams happen with US dollars. How many people here in the last year have probably received 100 scam phone calls? Either, hey, I'm from the FBI, or I'm from the IRS and you didn't pay all of your taxes, and they want you to go follow a link and pay money in USD. How many scams happen where you get emails, with great deals and you think this is a great purchase? They've been tracking what you've been wanting to purchase. They advertise something to you, you purchase it, and it ends up being a scam. You never receive the product. Scams happen. The government cannot protect individuals from losing money, and they cannot prevent they can't prevent criminals from being criminals. Like that's the other thing, is like, it's almost like, are we not expecting criminals to act viciously? They're going to act on whatever they can. The difference is that we actually have a decent job we actually can decently catch the criminals if they're scamming people via the blockchain technology, because we can track where that money is going. You can't do that with US money. You do that with cryptocurrency. So I have two big problems with this move from NatWest saying, oh, we want to protect people from losing life-changing money, and oh, crypto is such a scam. Guess what? The world is a scam. Everything scams. You will be scammed. It has to do with the nature of humankind. I don't know what your belief systems are, but in mine, ever since the fall of man, when Eve ate the apple, man has struggled between good and evil, and there are some of us that do better than others, but all of us have an inherent ability to be evil in one form or another, some more than others. And no matter what your currency is, that's not going to prevent criminals from being criminals.
That's right.
What we can do, though, is give people the freedom to protect themselves and have an ability. Again, blockchain technology would allow us to trace criminal activity 10 times better than the current fiat system. This is all just smoke and mirrors for the bank to say what it really wants to say, and that is, we are terrified of cryptocurrency. We're terrified of blockchain. We're terrified that people are going to run to our banks, grab their money, and put it into cryptocurrency. So we can't all but ban it, because that makes us look like that's like the giveaway that we hate it. Let's just put a restriction and then claim it's to protect people's money. That is not what this bank is doing. NatWest, they do not care about people's money. They care about people's money being in their hands. They don't want it in anyone else's hands. This is, in fact, guys, a good sign. Again, we're in a season right now of cryptocurrency where for a while, it was just ignored. Back there in the early, like 2009, 2010, all the way through 13, everyone just ignored cryptocurrency and Bitcoin. It was just a joke. Then we moved into a season where it became more relevant. It had some pumps. People were making millions of dollars trading cryptocurrencies. So it became a joke, and they laughed at it. Oh, that's that digital money online that people trade and they play video games with. Haha, it's so cute. Well, now we are in a season of maturity where they are fighting us. So don't be surprised by stories like this. Don't be surprised when banks and governments try to prevent you from acting on your freedom. It's actually a sign of respect Cryptocurrency is legitimate. It's a legitimate threat to the current financial system, and they're going to fight it tooth and nail. But these are the types of fights they will lose in the long term, and we will see cryptocurrency prevail. The question is when, not if.
That's right.
And I actually want to add to that real fast. So it's interesting that, they don't want the money out. And I think Ninja Glock, what he said is absolutely on point. They don't want that liquidity pulled out. They don't. And they know that it's going to crypto, which I do find very interesting, going back to that Voyager article that you showed, that they're trying to block it. It's almost like they are trying to keep those people from getting their lessened amount of money that they had in there during this time period when they could actually make their money back in crypto. Because the longer they wait, the longer it's going to be going into the bull run, and they're going to miss all of this opportunity to flip their 70% or 60%, whatever they end up getting back out of that deal, so that they can lay it up and make all of these gains. So this would be the opportunity for those people to take their 60% and turn it back into 100% plus of what they had in there. And it's almost like they're trying to stop that from happening. So
you want to talk about proof of the collusion that people have been discussing between the SEC and the government. The SEC has been taking L's left and right. I've said that line several times in the last week. They lost. They tried to block this merger of Voyager and Binance.us. They lost. They tried to go after and close down Binance. They lost. But guess what? Their big buddy, their good friend, the U.S. government, is now coming in and saying, I know the judge just ruled that the SEC was unreasonable, but let's keep dragging this out. Let's appeal this real quick. And it's just like they're not even hiding it anymore. Like it's not a rumor. It's not a question like, oh, are the SEC and Washington working together on some of these deals to fight against cryptocurrency? This is the absolute proof of it. They are absolutely 100% working together. They got their big player out of the space, SBF and FTX. That was their inside man. You got the SEC regulators, you got the lawmakers, and you got one of the largest exchange operators all on one team. Well, guess what? One of them went down, so the other two are trying to make up for all the mess that they made. This is the absolute proof. It's not a tinfoiled hat at this point. We're just watching the facts lay out. The government and the SEC are working together, which is one of the other articles you talked about. I don't have it pulled up, but the SEC investigating the Silicon Valley. How much do you want to bet that their investigation is to go in and cover up the corruption, not to actually go and find the corruption? I guarantee nothing is going to happen in that investigation. There's not going to be any wrongdoings on the sake of the government or on the banking system. They might try to put all the blame on crypto, because there was a little bit of crypto wrapped up there. Obviously, we know USDC had some money over there. But there's not going to be charges. They're not going to go after Silicon Valley the way they've gone after XRP and the way they're going after, they want to go after Ethereum, and they're going after exchanges. It's not the same thing at all. This is more of a cover-up story. And again, that one you could say maybe that's a tinfoil hat moment. But again, I'd like to hear why people would disagree with that one. I think most of us are on the same page there.
Yeah, it's interesting. I mean, it's not criminal to be over leveraged. Right?
No,
it's just mismanagement.
Yeah.
So, I mean, I don't think that the DOJ is gonna find anything criminal here. I think that they may see. I mean, unless there were some kind of communications between SBF and key executives over at Silicon Valley Bank. But yeah, no, I don't think that you're gonna find individuals in the SEC that are as motivated and are sharpening their teeth to go after a bank versus a coin. It's a different animal in their view. So
yeah, I mean, last thing I'll say there, and then we can move on, is also watch for them potentially, if there is any blame put there. It's to continue the narrative. What we've heard from Biden here recently, what we've heard from Janet Yellen, this overwhelming, you can trust the banks. You can trust the banks. So guess what? Right now, people don't trust the banks. So I guarantee any type of investigation goes on, A, is to cover up, and B, is to spin a narrative to continue that thought being pushed by the government, and that is that the banks are safe. Do not run away with your money. Do not try to come get it. You're fine. And all the while, they're just stealing it out the back door. They're stealing it out the back door. Everyone who knows what's going on is pulling out all of their money. They are I would not be surprised to know if some of these major players are actually secretly investing in cryptocurrency, because they know it's actually the more stable and safe place to keep your store value.
Yeah. Well, and gold. I mean, that's that's just the reality of it. And so
Although gold hasn't really been boosting from all of this.
There's reasons for that potentially, but one thing to keep in mind is what I think is going to happen here is if things get really bad, I think you see a CBDC very quickly. I think that's going to be a card that they kind of have up their sleeve to try to play. They've been testing a CBDC at the New York branch of the Fed for, I want to say, about 4 months now, right? And there's other Western countries that they've been working with in collaboration who have also been experimenting with CBDCs. That technology at this point, I wouldn't say that it's ready for the market, right? But if they start getting the nod from key powerful individuals and interest groups, like, hey, we need to come up with an alternative here where everybody's going to get into gold and crypto, and they're going to even sell off the treasuries, right? And we're going to see money movement that we haven't seen in generations. They're going to go ahead and launch their next best thing, right? They're going to try to do something that they've never done before and that they've been putting a lot of resources and money into developing. And so I wouldn't be surprised here if that things continue to go south for banks, for the traditional financial industry that is built on greed, it's built on debt, it's built on all the wrong things, right? If it continues to go in the wrong direction, I think that they do roll out this shiny new CBDC that's going to be marketed as the best thing, and it's going to be the answer to all our problems, and it's going to be, unfortunately, believed by a lot of people. Hopefully, not the majority of Americans. But but Piper, what do you think about that? Do you think CBDCs are closer now as a result of the bank collapse, or do you think that the Fed is and the government and the power that at B is less likely to roll out a CBDC because they kind of see it as crypto?
I think they almost have to at this point, and this is the reason why, because everyone's losing faith in the traditional dollar, traditional finance system. This is a way for them to take garbage, wrap it up in wrapping paper, put a nice shiny bow on it, and say it's new finance. And it's not. It's going to be the same garbage inside that nice shiny box. And as far as the banks limiting how much they can get into crypto, how much they can move their money into crypto at that bank in the UK, I want to know when's the last time the bank said, hey, you can't use your money to buy lottery tickets, or you can't use your money to buy, sugary junk foods with no nutritional value, or the private that buys, the 1990 or 2005 Chevy Camaro on a 21% interest rate. Like, where's the bank telling these people not to make these bad decisions in finance and money spending, right? So this is the precipice point right there, is when they start telling you can't buy crypto with your own money, but they don't tell you anything else. Well, when is everything else is next? When does it come? Like, when are they going to start telling me I can't buy Coca-Cola because it's bad for your teeth? Like, at some point, that's weird that every step becomes a new standard, right? So that's my problem with that. But at the end of the day, I think CBDCs are going to be repackaged up and shilled out to us by the federal government to make it look like it's the newest thing and that it fixes everything, when all it is just repackaged garbage. So, and banks, it's not their job to regulate how I spend my money. We have regulators for that. Banks are supposed to hold my money and protect it, and they're failing at their job. So,
yeah. Well, as we close out the show, we did have 2 super chats I want to address. First of all, thank you to both of you guys for giving. Mr. Bitcoin first said, let's learn how to unbank. I agree 100% with you, Mr. Bitcoin. Let's see. The other one we had, Hey Zeus said, can you describe how to get the golden pocket? So I'm going to do this really quickly. Army Piper, if you share my screen, the golden pocket on Bitcoin, no matter what you want to do, if you want to go from the bottom to a top or a top to the bottom, it's a retracement tool. So first of all, you open the tool, you would go to a local bottom. Let's talk about this one right here. And let's go up to the local top that we had, or not the local top, the more recent top of 25.2 before this other one. The golden pocket falls down here. So the way you address this is when you click on the Fibonacci retracement, you can go to the settings, and there's all these different levels that you can address. The golden pocket is 0.618 and 0.65. So you want to make sure those are turned on. And of course, then when you're looking at your Fibonacci, you'll see those little levels right there. That is what you call the golden pocket when you're doing Fibonacci retracement. I did want to say, I didn't say this earlier during TA, but while we did hit our golden pocket, hitting the 25.2, notice here as we keep an eye on this trend has continued. Watch, because technically speaking, even though this happened before, all these levels are very, very significant. If you were to stretch up to our more recent high, the golden pocket is where we bounced here at 19.5. Also, I guess the last thing, I didn't mention this earlier either, is that we set up, after all that time, we talked about CME gaps in the future, the Bitcoin futures CME. We just created another one here the other day. Let's go to the daily chart so I can see it cleaner. We created another one that would bring us all the way back down to 19,900, give or take about $20,000. Keep your eyes on that. That's another reason, although a lot of things are bullish right now, this could be the gap that gets left empty. But while we're this close and we are within very easy strikey distance, keep your eye on this golden pocket once again with these new levels. The bottom back in November, the new top we just had here a couple days ago, golden pocket sitting here close to $20,000. That is all we have for you guys in this show. But if you have enjoyed it, make sure on your way out you smash that like button and hit subscribe for more content just like this, where we cover all of the news, we cover the TA, we cover everything you need to know so that you can invest wisely for yourself, as we've covered very heavily in this video. The government does not want you to do things for yourself. They want to control your money. They want to control you. The faster you can educate yourself on how to invest properly, the faster you get towards that position where we just talked about being unbanked, meaning you are in control of your own finances, nobody else. That is what this channel is all about. So make sure, if you are not already subscribed, you subscribe today. With that said, though, that is all we have for you, and we will see you guys tomorrow. You guys have a great day.
Out.